David Kelly, let me turn to you and get your overall reactions here, maybe particularly to what Rick said, and that is that maybe at some point there will be an abrupt change that will surprise the market. But let me also ask you this question. If you were in the room as a voting member here or an advising member of the Fed Board of Governors, the Open Market Committee, what would you be urging the group to do?
Well, at this point, I would do what they actually did. They did. I think it was interesting that they basically signaled that they are still on track to taper by adding that phrase about reducing asset purchases may be warranted. I think that's an echo of what Chairman Powell has said a number of times before about how they'll give us plenty of notice. So that is that's a first official warning that tapering is coming. I think it's coming in December. I think they'll announce a schedule in November and they'll start cutting purchases in December. So I think from here, this is what, I wouldn't do much different from what they're doing. But I think they need to during 2022, they need to gradually certainly start raising interest rates at the end of the year, maybe even sooner than that. And they need to bring rates back to more normal levels because this level of interest rates is distorting everything in global capital markets. And it is building up problems which are going to hurt us in the long run. So the economy is getting healthy again. They need to get back to normal.
John Bellows, what would you say about financials breaking out to session highs here?
Well, I guess first I'd just like to pick up on something David just said and on the flatness of the yield curve, which Rick mentioned earlier. I think part of that is this growth slowdown we're in. We've seen a material downgrade in U.S. growth. Obviously, there's a global growth concern emanating from China that's not just financial stability concerns, but instead there's kind of a broader growth slowdown going on there as well. And, that's a big deal for the Fed because a big part of their outlook into 22 and beyond is kind of robust global growth. And so if you are in a period of slower global growth, I think that has implications for your rate hikes. It certainly has implications for the right level of yields on the back end.
But that's, John, that's exactly why I asked the question, because if what you're describing is true, then why would financials be breaking out to session highs here? If they're seeing a slowing global economy and a flatter yield curve, they shouldn't be acting like this.
Well, I think this kind of feeds into the Fed reaction function in the following sense, is the Fed's going to proceed very carefully with their removal of accommodation. And so the Fed does not want to upset the recovery here. They don't want to be the cause of further flattening. And so I think they're going to proceed cautiously. And so, I think you're having a little bit of a rebound on perhaps the Evergrande in China, and maybe financials are doing well on that. But I think the big picture here is that slower global growth may actually be a good thing insofar as it slows down the Fed a little bit. It takes a little bit of the heat out of the maybe inflation picture and puts us on a little bit slower, but maybe a little bit more sustainable course. And so, again, I think it causes the Fed to be cautious. I'm not sure it's a bad thing. I think actually slower global growth could be the foundation of kind of a more lasting recovery here.
Maybe then if I could rephrase what you're saying, if people look at the activity in the bank stock this afternoon, you would say it's not because of this sort of hawkish move on bringing the rate hikes into 2022. You would say it's actually a dovish interpretation of what the Fed's just done, even though they're signaling the taper, even though they pulled that rate hike forward. If you look across the financials right now, if you look at the way that Bitcoin's behaving, the way the dollar is, that it's actually because they're thinking maybe this is a more accommodative Fed?
Yeah, I think the Fed's in this phase of removing accommodation as expected. So I think they're aiming for neither hawkish nor dovish, just do as expected. And so I think there were people who were worried about a hawkish surprise today. That doesn't appear to have materialized. We'll hear what he says in the press conference. But I think the Fed's just doing as expected, neither hawkish nor dovish. And, as long as that's the case, again, slower global growth takes a little bit of the heat off, and I think that could be a good thing.
Shepard Smith here. Thanks for watching CNBC on YouTube.